We are always on the hunt for good stocks, good companies to help us make profits, premiums to help us grow our financial wealth. Well, there's really two types of traders. There is an investor and a trader. A trader is someone who's in and out on the swing, mostly in a month or less, weekly, bi-weekly, and you're considered a trader if you're trading in short term, like 1 month, 2 months, weekly, bi-weekly, and you're also considered a trader if you're a scalper or a day trader. All of these are traders. However, if you're an investor, it means you buy stocks and you hold them long term and you add to your position consistently, whether the stock goes down and you dollar cost average or the stock goes up and you dollar cost average. You're consistently holding and adding to your position to sell at a much later time down the road, usually 2 to 3 years plus. This is an investor. Now, there are two different types of stocks. There are growth stocks and investor stocks. Investor stocks, in my opinion, is what I call it, are stocks that are like Apple, Nvidia, AMD, Google, Netflix, Meta. These are like investor stocks. Growth stocks are like SoundHound, Palantir, SoFi, Neo. As investors, we're always looking for the next big company to get into, because even though Apple and Nvidia and Amazon and Google and Meta and Netflix and Microsoft, these companies are great, but how much profit is there left on the table? It's almost like trying to drink the last little bit of water at the bottom of your glass. Just that last little bit. Like how much profit can be squeezed or juiced out of the lemon or the orange, whatever example you want to use. How much is left? If you buy Apple at $210, is Apple going to go to $1,000? Highly unlikely. And if it does, it's going to be 10 to 15 years down the road. So Apple could return a 10, maybe even a 20% return over the next year or two or 3 years. However, we're looking for stocks to grow rapidly with good companies, the diamonds in the rough. These types of stocks are like Tesla was in 2015 or 16. Only 4 years later, it was like a 10, 20, 30x return or more. These are the stocks we look for as investors trying to grow our portfolio. So in this video, I want to show you guys 5 stocks that could make you rich because they have so much growth potential that you guys don't want to miss this. Now, these aren't Hail Mary plays or all the way out in left field. I have certain rules that I follow. For example, stocks have to be under $20 because once they're over $20 or $30, they're already on their way and we've missed a lot of the move. Number 2, they can't be stocks that are under $5 because then they're too risky, and they got to have at least decent growth potential, preferably debt-free, but they don't have to be. There is another set of rules that I always look at when looking at these types of companies, and that's the news and where they started, what their business model is, and where their guidance is and projected to go. But ultimately, they got to be between $5 and $20, and they can't have any delisting issues. For example, Nikola is a very good investment, long-term. Mullen Automotive is a little too risky, and Neo is starting to show signs of it maybe being a little too risky. So these are stocks I don't include. Canoe is another good one. Lucid Autos, they're all really decent stocks, but they're not quite ready for this list. This list is a little bit more stable, a little bit less risky, but still with a lot of the upside potential. Are you ready? Let's get started. I'm always on the hunt to find good stocks to invest into that are going to yield a pretty high return, 5x, 10x, or more. And I plan on making this a series on the channel, so comment below if you guys would like to see an update every single month on new stocks that I find that have the potential to yield a 5x, 10x, or maybe even 20 or 50x return. Before we dive into the top 5 stocks right now that could potentially make you rich, if you guys are having trouble in the market, you're having trouble understanding technicals, fundamentals, maybe you're a beginner, maybe you're not a beginner, but you're just struggling, I offer full one-on-one coaching, Discord, and training course to surround yourself with like-minded people to help you understand and grow as an investor or trader. I've spent so much time perfecting my strategies, and I'm truly driven every day to help people like you achieve financial freedom. So I would love to help you trade and invest and grow your portfolio. Everyone that's in my Discord right now is making between 5 and 15% per month, and everybody has been able to increase their portfolio size, and they're getting better and they're learning and they've become profitable. So I would love to help you. If you guys guys are interested, you guys can sign up on my website, investwithcorey.com, right there on the screen or in the information box below. I look forward to speaking with you very soon to help you grow on your financial journey. I just want to point out that I'm not a financial advisor, and this is not financial advice. I'm just here to show you guys the technicals, the fundamentals, financials, and go over stocks with you and sentiment, teach you guys which stocks have potential. Ultimately, it's up to you to decide how much money you want to put into a certain stock and what size of a position you want to have or what stocks you even want to invest into, because ultimately it's your money. So we're going to start off with stock number 5, and this is a really good stock. This is actually one of my favorite stocks to trade, and that is Ford. Now, they did miss earnings a little bit previously and the price dropped, and the reason for this was warranty claims. However, these warranty claims were temporary, kind of a one-off deal. Now, they were quite excessive in value. Ford had to spend a lot of money to basically fix these vehicles, but it's not an ongoing thing. This is going to be resolved this quarter or next quarter, so going forward, it's not like a redundant or an indefinite or chronic problem. Ford's fair value is actually $19. I got in at 12, got out at 13. The price dropped to the low to mid 9s. Now it's back up to the mid to high 10s. It's a very good buy. Fair value is 19. They have good cash. They have good growth. They're old money. They've been around a while, and they're a dividend stock. So if you invest in a Ford, you're going to collect dividends. You can sell covered calls. You're also going to collect the growth of the stock. Now, Ford really sits between $12 to $15 most of the time, and right now it's at 10. So in the next 6 months to maybe 9 months, you stand to make about 30% on the stock plus the dividends plus covered calls. That means if you were to buy 100 shares of Ford for $10.50 and it goes up to $12.50, you would make $200 plus 6 months worth of covered calls, which would generate about $25 a month. So you're looking at another $200. It's a $400 profit on 1,000 in about 6 to 8 months. Plus you'll get 2 dividends in between that, which is about $15 to $18, which is another $30. So you're looking at close to $450 in profits on 1,000. That's a 40% return in 8 months. Very good stock, and there really is no downside to Ford right now. They have a lot of support in the $9 and $10 range, and they're a very good company. And I believe Ford is going to go up pretty quickly in the next 2 earnings. So by the end of the year, it'll be too late. The only reason why Ford is number 5 is because the chances of it giving you like a 30x return is pretty slim, but it is going to give you up to a 1 or a 2x return depending on how long you hold it for. But I would say at least a 40% return in the next 6 to 8 months. Number 4, this is very tricky stock, and I was kind of apprehensive of adding it to this list, but because of how cheap it is now in comparison to where it was, makes it a great stock. Number 4, Intel. Under $20 could be worth it. They're also at risk of being acquired by somebody else. It would not surprise me if AMD or Nvidia acquire Intel in the future. If this happened and you're a shareholder, it just means the value of Intel would go up, or if they merge the companies, you would get merged into Nvidia or AMD stock or whatever company could hypothetically or potentially buy the company. You would get a cut or you get bought out. Almost like the same thing that happened to JetBlue and Spirit Airlines. If you were holding shares of Spirit Airlines, you would collect a very special type of dividend every month. Then they would buy your shares out at a certain price. It'd be kind of like a merger agreement. So like, let's say hypothetically, if Nvidia was to purchase Intel, there'd be some form of agreement that all Intel shareholders would get their shares purchased back from Nvidia at $40 a share. So if you get in at $20, so you're doubling your money if something like that were to happen. Now, it's not out of the realm of possibility that they would get acquired. It's very possible it could happen. And during mergers, what I just told you is what happens. Now, the exact amount is really hard, to guess, but it could be 25, it could be 30, it could be 40, maybe even higher. There's also the possibility, number 2, that Intel turns it around. They've cut their dividend. There's no more dividend. They limited the previous one, and over the next 2 quarters for the rest of this year and possibly next year, there's no dividend. So they're cutting their expenses and trying to turn it around. They're the only American company that produces all of their semiconductors and their chips right here in-house in the United States. Not all of them, but they do in-house production in the States in Arizona and Oregon. Now, I will tell you that Intel has the potential to turn it around. There's also the possibility that they could get acquired. Either way, an acquisition or turning it around, both prints profits. So the reality is, are they going to do one or the other? Most likely, they're going to turn it around or get acquired. Bankruptcy, it's not likely, but there's always a potential. But at $20 or less, there's nothing really but upside to this company, especially if the upcoming earnings is as good or better than the previous one and they don't go down anymore. If they can stall and start a turnaround by the end of the year, this is a great company to invest in. This next stock, the number 3 recommendation, is very strong. It just got an upgrade from $15 to $23. It started out around $9 to $10 at the beginning of the year, made a run to $23. Now it's pulled back to $15, and it's the perfect time to buy. I have set my account to start selling puts between 14 and 15 to get into this stock specifically. So number 3, HIMS. HIMS is a very good stock right now, and the year-over-year and quarter-over-quarter growth is absolutely phenomenal. They are debt-free, and they're consistently beating the earnings every single quarter. They're using AI to match customers to providers, giving them the ability to have privacy while attaining the products that they desire, whether that's between a married couple for adults or whether it's hair loss, skincare, pretty much anything that you could go to a pharmacy to buy. They're online and they use AI, and they're forever growing and evolving. AI is pretty much putting them similar to SoundHound or Palantir because of the fact that they are an in-home pharmacy with AI. They're almost a one-stop shop at this point. And if they continue to grow and go in the direction that they are, this is going to be a very good company to hold, because if they go to $50, that signifies a 3 to 5x return. And it's very possible because they just got upgraded for a second time up to $23. Just over a year ago, they were $9 or less, and now they're already upgraded to $23. That means they've already made a potential double to triple 2 to 3x return, because they were already at $20+. They're actually at like 22 or 23 or a little higher most recently. So they already achieved a 2.5x return from anyone who invested a little over a year ago. Now that they're back down around $15, I'm looking to enter in the $13 to $14 range. I'm going to play this very smart and try to make my entry, and you should too. This is a very good stock to get into. You can sell covered calls. If the stock runs to 23, you're going to get roughly a 30 to 40% return plus covered calls. So in a matter of 6 months to a year, it could be 50 to 100% return because of the covered calls and the growth of the stock. And I have a lot of belief and a lot of faith in this company based on what it's shown me in the last 2 to 3 years. The number 2 stock was a pretty big dogfight for number 1. And ultimately, this stock almost found its way to the number 1 position on the list, but not quite, because the number 1 stock just has a little bit more going for it. But this segues us into the number 2 stock. This company that I'm about to tell you has proprietary 3D technology for battery design. Silicon anode lithium ion batteries. Proprietary technology. And this company is Enovix, ENVX. They not only just produce batteries, they also are in the process of designing batteries for EV manufacturing. Their proprietary cell 3D architecture allows for a longer life battery with a higher density output. Cantor Fitzgerald gives them a price target of $30, and right now it's at the near bottom of the 52-week average. So you can get Enovix for under $10. They just crushed the previous earnings, so now is the time to get in. The stock has fallen from 18 to 9 after they crushed earnings, and the guidance was pretty decent too. This is a very good opportunity because they were already at $20 or $25 recently. They had some speed bumps or hiccups that they went through. However, the 1-year price target is $30, signifying a 3x return on 100 shares would give you $3,000 from a $1,000 investment, not including covered calls. This company right now is down because the EV sector is down, because the interest rates haven't gotten cut yet, because the Japanese interest rates were increased, the market tanked, and now it's under a recovery. And we finally have reached that recovery period, but the EV sector has not recovered yet. It's going to be another year or two before the automotive sector and the EV sector recover. This company will be on the pinnacle top list of companies to invest into at that time. And in a year or two, or maybe 3 years down the road, this company will be $20, $30, $40, and everyone's going to be recommending it, but it'll be too late because by then there's only going to be a little bit of growth left in the company. Right now, it's a lot lower, near the bottom. Why would you want to wait to get in at 30, 40, or 50 when you could get in at $9 and change? ENVX, Enovix, is number 2. Well, if that's the number 2 company, then what the is number 1? The company I'm about to tell you is the best growth and potential return investment right now especially at its price. Nvidia holds a 10% stake. They just partnered with Shake Shack to have robots and autonomous robots. They've been partnered with Uber Eats for the last 2 years in the Los Angeles area, the greater LA area, and they're looking to expand. This company is Serve Robotics, SERV. They have went from $2 to $15 in the last couple of months. This company has extreme growth potential and they've pulled back to the $10 range. I am invested in Serve Robotics and I highly recommend you doing your due diligence and looking at this company because the fact that it's involved with NVIDIA, AI, and robotics and autonomous robotics, the fact that they're in food delivery and they're expanding everywhere, including their partnership with 7-Eleven. This makes Serve Robotics the #1 stock to get you rich. This stock I would definitely buy and hold. It has the potential to reach upwards of $50, $100, maybe even $200 or $300 in the next 5 or even 10 years, maybe sooner. But realistically, it's AI, software, autonomous robots. So it's hardware AI, software AI, and it's partnered with NVIDIA, or NVIDIA is invested in them. This is a great opportunity. It's not a guarantee, but this is the strongest company on my list. The partnership with Shake Shack allows Serve Robotics to potentially meet their estimate and their goal to have 2,000 autonomous delivery robots ready to go, fully operational with Uber Eats by 2025. If they match this goal by 2025, which is only 6-7 months away, the stock price is going to skyrocket to $20, $30, $40. And right now it's around $10 or $11. This is the opportunity, or at least potentially the opportunity of a lifetime, where you should really consider looking at Serve Robotics. Don't forget to leave your comment below if you guys enjoyed this video and you would like to see a video like this every month in a new series where I scavenge the stock market looking for the best candidates that could potentially give you a 5 to 50x return, maybe even possibly make you rich. If you guys are interested in seeing this every month where I scour the stock market trying to find you the best candidates, let me know and I would love to do it for you. Also, if you're new in the stock market, or maybe you're somewhat of an intermediate trader, maybe you're a little bit more advanced, but you're just struggling, I would love to help you achieve your financial freedom and the financial wealth that you ultimately deserve. I offer a full training course, a Discord, and a full one-on-one coaching for you guys to achieve your financial freedom and your financial goals. I would love to help you. It's what drives me every single day. You guys can sign up at any time at investwithcorey.com, right there on the screen or in the information box below. I look forward to speaking with you, and maybe one day I'll be able to coach you and help you achieve your goals. Don't worry, guys, this video's over, but I picked out another one just for you. And that video is right there. Click that video and I'll see you over there. And remember, until the next video, let's grow our wealth together. Take care, guys.